look, I mean, not only has it been happening, now it's out there. I mean, JP Morgan fined $962 million. Just let that number sink in for a second. That was the fine levied against them for admitting that they manipulated the price of gold, that they spoofed the price of gold. Now, when someone asked them, well, how could you do that? I'm like, well, we made $20 billion. It's like 5% cost of doing business. I would make that trade. I would pay 5% to make 100 times out of 100. It's kind of like there was a year, 2014, ExxonMobil made $40 billion in profit. That year, they spent 360 some odd million in lobbying, fancy word for corruption. And how much did they pay in tax that year, Danielle? Well, the tax rate at that time was 40% for corporations, so they should have paid $16 billion. But how much do you think they paid? Great guess, best guess ever. Actually, they got a rebate of $1.8 billion. So they turned $367 million into $17.8 billion. That's almost as good as that family that put the 300,000 into 400 million. So that stuff goes on, and it's not right, but ultimately gold is a problem for the banksters because gold has been a perfect store of value for 5,000 years, right? 1 ounce has bought a fine person's suit for 5,000 years. From Cleopatra's time to a suit of armor, to a zoot suit in the 30s, to Savile Row today. Go to Savile Row. I was just in London, went to Savile Row. I didn't buy anything because I don't wear suits anymore. But if I would have bought a suit or bought you a nice suit, fine man, fine woman suit, about $1,500, $1,600, about exactly what an ounce of gold is. So why does that matter? Well, if you denominate assets in a depreciating currency like the dollar, you'd think that stocks are making new all-time highs. If you denominate stocks in gold, stocks have been dead flat since 1996. What? What are you talking about? Yeah, the currency has devalued, so it looks like you're making money in nominal terms, but your wealth is being stolen through this thing called inflation. You ask people all the time, what's the best performing stock market the last 3 years? I go, the United States, not even close. Venezuela. How many Venezuelan stocks did you want to own? That would be zero. Because the only people that win in Venezuela are Maduro and his cronies at the top, because they own all the assets. Then they devalue the currency by 99.9999%, and they impoverish the masses, and all the wealth goes up. And so their stock market looks like it's making all-time highs, but you don't want to own it unless you live there and denominate in bolivars. But if you own it in dollars, you got a big old goose egg. So this idea that manipulation of certain assets, because if gold were the price that it should be relative to the number of dollars that have been created in the last 2 years, it would freak people out and they would lose confidence in their currency. And that's the thing. Currencies are all about confidence. Nothing backs currency, right? People say, oh, what backs Bitcoin? Nothing. Well, what backs the US dollar? It's a green piece of paper. What backs it? No gold, no silver. You don't get a share of revenues from the government. If I gave that green piece of paper to the government, they give me nothing in return. And the thing is, in Israel, they like yellow pieces of paper. And in China, they like red pieces of paper. They're just pieces of paper. The only thing that makes currency valuable is belief and custom. You and I agree to exchange that currency. Yeah, so look, Bitcoin is cyclical. And digital assets broadly are cyclical. And it's because of the genius of Satoshi Nakamoto, whoever he, she, they are. I guess he self-identified as he once, so we have to assume it's a guy. I think it's more than one. I think it's a group, and maybe Hal Finney was one. But God rest his soul, amazing guy. So, but the genius of it, there are two things that are genius. One is proof of work. The way it works is it protects you against the biggest risk, which is a 51% attack. Because the moment you do a 51% attack and change the block, the value goes to zero. And all the money you spent to hack into this amazing supercomputer, you just lost. So there'll never be a 51% attack because there's no incentive to do so. The second thing that was amazing is this built-in halving cycle. So you start with block rewards every 10 minutes. So all the hash power, all the computers, big data centers are trying to solve the algorithm to encrypt the data or the ledger. And the block rewards are given out every 10 minutes to the computers that contribute the most hash power. Okay, that's great. So then every 4 years, the number of block rewards gets cut in half. Well, why does that matter? Well, think about it. The miners' costs are pretty fixed. Electricity costs are fixed. The machines have already been paid for. And so what has to happen is either half the miners would go out of business because the number of rewards just got cut in half, or the price will rise to make the miners profitable again. Now, there could be a difficulty adjustment too, but the bottom line is there's a built-in number go up, and that has been the case. But because of that, this natural movement up is like the natural rising slope of stocks. Stocks rise over time. Why do they rise over time? Because there's inflation, because companies grow, they produce earnings, okay? But what happens is you get greed and fear. There's a cyclicality based on the liquidity in the markets that creates a cyclicality of stock prices, highs and lows. Same thing in digital assets and crypto and Bitcoin. So Bitcoin goes through these 4 seasons, winter, spring, summer, and fall. Now, we have been in crypto winter, right? Since November of last year, and it's not seasonal like normal seasons, but since November of last year, and actually I'll argue even before November of last year, I'll argue since midsummer last year, till right around now, and I'll talk about it in a second, we've been in crypto winter. What is crypto winter? Crypto winter is when the price exceeds the value. Well, what's the value? Well, the value, according to Metcalfe's law, is based on the number of participants and the number of transactions and all these things. And it's a very elegant curve that we can model, and we can come up with the value. And the fair value of the Bitcoin blockchain today is somewhere around $30,000, in the low 30s. When it got to 69,000, we were way above. And that was the euphoria of Bitcoin fall, right? Fall is when people are just going crazy and they're getting excited. But then winter hits and we start to go down and we correct all through winter and we get to a level below fair value. So today at 24,000, we're below fair value. We got all the way down to 17.5. Now I will argue, and I've been arguing this for about 10 days or so, and I'm not ready to absolutely call the bottom. But if you go back a week ago and watch a podcast I did on the margin, I said, you know what, look, we made 3 higher lows. Okay, so we hit 17.5, then we went up, then we fell to about 18 something, then we went up, and then we went to 19, and then we went up. And there was a number about 20,900. And I said, if we break 20,900, we'll have 3 higher lows, 3 higher highs. That's a pretty good bull trend, and maybe spring will be here. So I will argue that spring has sprung. If you look at the past 2 cycles, we are the same number of days into that cycle where spring began and winter ended. And so now spring could last months, right? We don't have to have an immediate bull market, but spring is gone. And then when we get to summer, that's when we'll get the next speculative move. And my guess is that will come in anticipation of the next halving in 2024. It did, right? All the leverage in the system is what caused the price to go to 69, which was way above fair value. All of that leverage has come out, right? The Celsius, the Luna, the leverage in BitMEX and Three Arrows Capital, all that leverage has come out. And today, Bitcoin is trading in the bottom 3% of its value relative to its long-term average. Really cheap. Versus stocks, which even after the decline of the stock market are still trading more expensive than 93% of the time in history. So to me, go away from the things that are still expensive and go to the thing that's cheap. One thing in investing, it's the only business I know. When things go on sale, people run out of the store. Just stay in the store and buy what's on sale.
Mark